Hey everybody, this is Markets for Millennials, and what I'm going to show you here is why I have updated my Bitcoin price and cycle peak date predictions, and I will be sharing them with you right here in this video. So what I want to show you here is kind of some things I was working on. So what you're looking at is the Bitcoin chart. Um, on log scale, you're able to clearly see the lines here, the white line being Bitcoin's price history and current price action up here in the corner. And you can see I have these purplish pink horizontals, which are marking these cycle lows. I have these golden horizontals that are marking the 1618 golden ratio, which was brought to everyone's attention by Misconfig on Twitter. And then I have these blue horizontals, which are marking the cycle peaks. And we are including the pre-first halving lows and peak in this as well. But obviously there's no golden ratio from that because we didn't have a peak before that. And so what I want to start with is I want to preface with a couple of facts about Bitcoin in the way that its cycle works. And I have a Twitter post that I'm going to kind of show you here. Um, if I pull this window over here, I should have had that ready already. But price and timing predictions are predicated on rhyming patterns that happen in every cycle so far. The first upside impulse above the 1618 golden ratio peaks somewhere near where the next bear market low will be, and I will show you this on chart. In the next, price successfully retests and holds the 1618 golden ratio, and then price peaks between the 2236 and 2382 fib levels. The bear market low is approximately 85% plus or minus 2% from the peak, and those confirm each other. And then finally, price usually peaks within 150 days of the mid-cycle low, which is we mark the mid-cycle low at the final retest of the golden ratio. And then cycle behavior following the mid-cycle low typically follows a three-wave pattern where the first or second wave retests what will eventually be the bear low following the cycle peak. And then the third wave is the parabolic blow off top. And so I want to put this in action, and I'm going to go one by one, showing you the levels. So I'm going to zoom in here on the 2013 bull cycle, including the peak. And I'm going to have to go back to the candle chart because this will make a little bit more sense as far as wicks. I'm using wicks, by the way, in this. A lot of people like to use closes. You can, but it obviously changes the numbers a little bit. To me, this is what I feel most comfortable with. So obviously, you're more than welcome to use different numbers and critique this, but this is just the thing that I feel most comfortable about. And so what you see on my screen here is all of these things in action. Again, starting with the first point that I made, which is that the first upside impulse above the 1618 golden ratio peaks somewhere near where the next bear market low will be. And then the other part of that comment was that the bear market low is approximately 85% from the peak. And again, here we go again, either the first or second wave retests the bear low. So where do you see that taking place? So looking at the chart here, the first impulse above the golden ratio. So again, the gold line right here is the golden ratio. And so this first impulse in this area usually tests where the bear market low at the end in the bear market section is going to be. And so you can kind of see that there. In this case, the reason why I marked it at this spot is because we obviously had a blow off top, like kind of a double wave blow off top sort of a situation in the 2013 bull run. And so, but you can kind of see that after the first sell off, our initial bounce back up tested that level cleanly. So you can clearly see that right there. And then you can see the retest or the test of the 1618 golden ratio right there. That's the first one. And then in the mid-cycle low, we obviously didn't come all the way down to the 1618 golden ratio, but this would be considered the last retest. And then so the cycle peak takes place approximately 150 days, give or take a few, after after that mid-cycle low is put in. And then in this case, what you see here is right in this area in the first 2013 bull run is where you get that initial retest of the bear market. It's wave 2, whereas in the 2017 bull market, I'll show you, it's wave 1 that retests it. So, and then you obviously see the parabolic blow off top, and I have the Fibonacci levels. You can see them on the top right corner here. The Fibonacci levels show you that we peak in between the 2236 and the 2382 level. And then obviously when you calculate to either of these 2 points, at least in the bear market following the 2013 peak, you see that it was approximately 85% from the cycle peak. And so it's very clear in the first cycle, these things take place. And so then let me go to the next cycle, the cycle 2, the 2017 bull run. Same kind of situation taking place here. So let me zoom it in a little so it's easier to see. So you have, again, this gold line is the golden ratio, our first impulse above, again, near the bear market low. In this case, we did not have a double wave parabolic blow off top, so we did not come above it. And what's really interesting here that has happened is you had this initial wave, we tested it once, and then came up to the bear market low and then came back down and tested the golden ratio again. And even though we wicked below, we did not close below, right? And then if you look here from the mid-cycle low, the first wave impulse out of the mid-cycle low is what retested what will eventually be the bear market low. You can see over here, which is again different from 2013 because in 2013 it was wave 2. That ended up being the bear market low. And what's really interesting is if you consider this right here to be wave 2, we had a really interesting capitulation in 2018, right, where we had this sell down. But if you actually look, this level almost was the bear market low. It's really interesting. So wave 2 in this case marked kind of a support level before this capitulation moved down in the bear market. But you can clearly see, again, it follows the same pattern. First impulse above gets near the bear market low, retests the golden ratio successfully, and then either wave 1 or wave 2 retests what will eventually be the bear market low. Cycle peak is between the 2236 and 2382 level, and then the bear market low is approximately 85% down from the cycle peak. So the same thing rhymed in this cycle in the 2017 bull run and then into the bear market as in 2013. And so finally then let's go to where we're currently at. I'm gonna have to adjust this a little bit to allow for all of this to fit here. And so what I did here was I took, it's obviously not clean, but I took the 2017 fractal, and maybe I'll darken it out for you so you can see it a little bit easier. And what I did was I put it I matched it up, I adjusted it and modified it so that the cycle peak would be in between the 2236 level, the 2382 level, and for the bear market low to touch approximately this level. And so what I see here is, what's really interesting is we did not get a blow off top like in 2013, but we also didn't get kind of a slow, gradual, systematic rise like we did in 2017. So I'll show you where the similarities are. So we have the first impulse above the golden ratio. This is where I think the bear market low is going to be at approximately And Twitter, I said around 38,000. I think it could be anywhere between 38,000 and 41,000. But I think that's where our first impulse is ended, right? And I'll show you where and you can actually see in wave two or wave one, I'm sorry, we retest that spot. Okay, so that would be very similar to 2017, where wave one is what retests the spot. Okay, we've had actually, interestingly, two, very similar to 2013, we had two periods where we successfully retested the golden ratio. And maybe some people would say that we actually had like 3 or 4 or 5 successful retests of the golden ratio. But these are two very different periods of time. So that's why I'm saying that it's two. Okay. But anyway, just like 2013, you see the two retests right there. And then price did this kind of rounding, Wyckoff top before we made the mid-cycle low, right? And so again, this is the final test of that golden ratio. And so that's where the 150-day plus or minus a few days counter starts. And if you average the two cycles, you end up with a peak date at approximately December 17th or December 18th, which is what I'm reflecting here, generally speaking, on this chart. And so if price followed the same fractal, then what would be really interesting is wave one would retest what I think is going to be the bear market low. Wave two would retest approximately the top move of the rounding top first peak that we had, right? So generally, again, speaking right here, that would be where the wave two retest would come in, right? And then the cycle peak would be somewhere in the range of 193,000 to 253,000. And what works then is if you take approximately this level, you get somewhere close to, again, 85% plus or minus 2% on the bear market decline. Now, I'm not saying that the bear market decline is going to be shaped like this and look exactly like this, nor am I saying that we're necessarily going to follow the same exact fractal on the way up. I'm just saying that we're seeing this continual rhyming that is taking place, where you have all of the same characteristics, where the first impulse is being the bear market low, the retest of the golden ratio, the cycle peak between the 236 and 2382 fib, and then an 85% decline to the bear market low, which matches the same level where the first impulse is, right? And so because of those reasons, my price target is between, and I believe I put it in my Twitter here, my estimated peak date is December 17th or December 18th, and my estimated peak price range is between 193k to 253k. And in my opinion, I think we're going to actually end up way closer to 253k. And this actually is supportive of, it's very close to what my original price prediction was, which was between 260 and 270k. And so that's just a quick look again at what I think is going to happen. Shout out to CTM members who have helped me to learn the cycle behavior. Shout out to Miss Config for the golden ratio. There's just a lot of different people. I can go to in my Twitter feed here, JCL Capital, Crypto Jed, Jesse Olson, Johal Miles, Fairfree Digital. Obviously, non-CTM members, Having Tracker, Rational Root, Misconfig, Into Cryptoverse, Charts BTC, 100 trillion USD, and Alan Au. So we've got a bunch of different people that have been instrumental in helping me to analyze the cycle. And this is just what I feel comfortable with predicting. This, unless something changes over the next month or so, this is going to be my final price prediction for Bitcoin. Obviously, you always hope that it peaks out much higher, but always be prepared to adjust your view. Always be prepared to change as quickly and early as possible. But this is where I see things ending up. So anyway, those are my price predictions. Thank you for watching. Go ahead and like, subscribe, and share. I'll see you guys next time.